In this video, we're going to showcase a simple strategy that you can use to identify super accurate buy and sell entry points. We're going to show you what indicators to use, the best settings, and we'll also go over the entry and exit conditions. If you find value in this video, remember to leave a like. Let's get into it. Now, let's begin by adding the main indicator of this strategy. To do that, you want to go to TradingView, which is the charting platform that I'm going to be using. If you need to sign up, link for that will be in the video description. Next, access the indicator search tab by clicking on Indicators. Then type in Bollinger Band Percentile Suite. Select this one by Eli Cobra. The Bollinger Band Percentile Suite, developed by Eli Cobra, is an advanced technical analysis tool based on the foundational principles of the original Bollinger Band Percentile Indicator. This is the original Bollinger Band Percentile Indicator, and this is the new Bollinger Band Percentile Suite. As you can see, there is a difference between the two. The newer version has the overbought level at the top and the oversold level at the bottom, making it easier to identify instances where the price may be overbought or oversold. It also has these circles that are called reversion bubbles. Then this white line is called the Bollinger Band Percentile line. Whenever it goes into the overbought level, that indicates that the market may be overbought. Then, as you can see here, as soon as the line exits the upper level, a red bearish reversal bubble is printed. This indicates that the market may be reversing to the downside. On the other hand, whenever the Bollinger Band Percentile line enters the oversold level, that indicates that the market may be oversold. As soon as the line exits the oversold level, a teal-colored bullish reversal bubble is printed, as you can see right here. Now, these features alone make the new Bollinger Band Percentile Suite so much better than the original Bollinger Band Percentile Indicator. Now that we know exactly what this indicator is made of, the next question is,
well, how can we use it to take trades?
Well, before we go over that, let's access the settings of this indicator so we can customize it to our strategy. On the Inputs tab, we want to change the high threshold to 110. For the low threshold, we want to change it to -10. Then on the Style tab, disable the midline. After that, click OK. We're going to be using the Bollinger Band Percentile Suite to identify overbought and oversold conditions in the market. The way we're going to do that is as discussed earlier. So like here, the market was overbought. We know this because the Bollinger Band Percentile line, this white line, went inside this red upper level. Now, after we identify an overbought market, we want to wait for the white line to exit the red level before we start looking for short positions. And that is going to be confirmed by this red circle up at the top. After we have the red circle, we will add more confluences from other indicators before we take the entry. And the opposite is going to be true for long positions. We're going to identify an oversold market by making sure that the white line goes into or under this blue lower level. And then we will wait for the line to exit the oversold level, and that is going to be indicated by a blue circle like this one. After all those conditions are met, we will confirm more conditions from other indicators before we decide to, take long positions. Now, at this point in time, I know you may be thinking,
but what exactly are these extra indicators that need to be added?
Well, I'm gonna tell you. But before that, let's talk about my favorite forex broker called Fintura. I've been using them for quite some time. As you can see here, this is my live account on MT4. Yes, MT4 is the trading platform used by Fintura. The reason why I think Fintura is a great broker is because of their low commissions as well as spreads that go as low as 0.0 pips. They also have a maximum leverage of 1 to 500. For those of you who love high leverage. If all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $50,000. So if you deposit, say, $5,000, they're going to give you a bonus of $5,000. So in total, you'll have $10,000 to trade with. To access the bonus, as well as all the other perks, sign up to Fintura using the link in the video description. Now, let's get back to the video. On the Indicator Search tab, type in EMA and select the Moving Average Exponential. The second indicator that we need to add is called Twin Range Filter. We're gonna go with this one created by Colin MCK. Then double-click on the EMA and change the length to 100. You also want to modify the color to a brighter one. For me, I'm gonna go with white. Now, for the twin range filter, we want to change the fast period to 27, the slow period to 65, the fast range to 2, and the slow range to 4. After that, click OK. And there you go. We have all the indicators needed for this strategy. The twin range filter is going to be used to identify buy and sell entry points. Whenever it says buy, we're going to buy. Whenever it says sell, we're going to sell. Pretty self-explanatory. The EMA is obviously going to be used to identify bullish and bearish trends in the market. For a bullish trend, the price needs to be trading above the EMA. Conversely, for a bearish trend, the price would need to be under the EMA. Now, let's go over the conditions for entering long and short positions using this strategy. Now, to take a long trade, first, we need to identify an oversold market condition within a bullish trend. This basically means that this white line of the Bollinger Band percentile suite should go into or under this tail horizontal level. After that, it should be followed by a bullish reversal bubble, basically a teal-colored circle like this one. This indicates that the market might be reversing to the upside. Now, to make sure that all this is happening within a bullish trend, you basically want to confirm that the candle that aligns to this circle opens and closes above this white moving average. So like here, this is the circle, and this is the candle that corresponds to this circle. And as you can see, the same candle opened and closed above the EMA. Condition number 2, which is also the last condition, is that we need the very next signal that is going to be printed by the twin range filter to be a long signal. If a short signal comes first, before the long signal, well, that setup becomes invalid. So like here, you can see that from this candle that corresponds to the bullish reversal bubble going forward, the next signal by the twin range filter was a long signal. So this trade setup is actually valid. Because of that, we're going to enter a long position. We're going to set our stop loss right below the most recent swing low. For the take profit, we could target 1.5 times the risk, letting this trade run, and as you can see, it hits take profit. As you can see here, this was another long position. The first condition is to identify an oversold market condition within a bullish trend. To do that, we just make sure that this white line goes into or under this tail horizontal level, and this bullish reversal bubble should be printed. Then, to ensure that it is in a bullish trend, you just make sure that this bullish reversal bubble is aligned to a candle that opened and closed above this EMA. Condition number 2 is that from this candle onwards, we need the next signal to be printed by the twin range filter to be a long signal. Now, how do we take a short position? Well, let me show you. First, we need to identify an overbought market condition within a bearish trend. This basically means that this white line of the Bollinger Band percentile suite should go above or reach this red horizontal level. After that, it should be followed by a bearish reversal bubble, basically a red circle like this one. This indicates that the market might be reversing to the downside. Now, to make sure that all of this is happening within a bearish trend, you basically confirm that the candle that aligns with this circle opens and closes below this white moving average. So like here, this is the circle, and then this is the candle that corresponds to this circle. And as you can see, the same candle opened and closed below the EMA. Now, condition number 2, which is also the last condition, is that we need the very next signal that is going to be printed by the twin range filter to be a short signal. If a long signal comes first before the short signal, well, that setup becomes invalid. All our entry conditions are met on this candle, so we're going to enter a short position. We're going to set our stop loss right above the most recent swing high. Then for the take profit, we could target 1.5 times the risk, letting this trade run, and as you can see, it hits take profit. In summary, this strategy leverages the Bollinger Bands percentile suite and additional indicators to identify precise entry points for long and short positions. By carefully following the outlined conditions, traders can effectively pinpoint market reversals and trend confirmations, thereby optimizing trade setups for potential success. Now remember, the strategy showcased in this video is not financial advice. Do your own due diligence as well as extensive backtesting and forward testing before before even considering trading with your real money. Well, that's been it for this video. I really hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.